So, greetings everyone. My name is Irfan Rahman Sakib, and I will be presenting about income statement for you today. And we will give you the basics for income statement for any layman person to understand. So, first, we will the objectives for this presentation is that why should a business keep income statements, and why should they prepare income statements? The difference between profit and cash, because we know that income statements is also known as profit and loss statement. Why is profit important for a business? And the difference between gross, net, and retained profit. And finally, we will see the format of income statements. So first, we need to understand that the difference between an account and an accountant. So an account refers to the financial records, all the financial records in the that occurs in a business transaction, and an accountant is the one who maintains, who prepares, and accurately forms the accounts or the financial records for a business or a firm. Income statement is a form of final account. So what do I mean by final account? These are accounts that are, or statements that are produced after the end of a financial year. All right. So, and profit and loss account is also one of the, or the income statement is also a final account along with balance sheet. So we need the information from the income statement for the balance sheet. But in today's presentation, we are going to mainly focus and cover on only income statement. Okay, now we will see the difference between profit and cash. Okay, so why is this question very important? Because many a times business fail because managers and owners fail to differentiate or distinguish between these two. So cash is a current asset or a liquid asset, and it is necessary for the daily maintenance of our business. Okay, and whereas profits are more important for the long-term business, for the long-term success of a business. That's why we have seen in the previous slide that it is calculated in terms of financial year. Okay, and after periodically rather than daily. So and see, if money invested in a business or borrowed by a business, it will increase the cash, but does not necessarily mean that it will increase the profit. Okay, so buying a fixed asset like a new machine or a building decreases our cash actually, because we are buying it with cash, but that does not mean that it decreases the profit. Credit sales increases the profit, okay, but it does not increase the cash. All right, so this way we can differentiate between. So in other words, increasing the profit may not mean increase in cash of the business at the same time. Okay, so how a profit is calculated? We have seen the difference between profit and cash. Now we will see the difference that how a profit is calculated. Simply, the profit is equal to the difference between the sales revenue and the cost of production, cost of making the products. So we can increase the profit by increasing the sales. Number two, by reducing the costs of production, and number three, by increasing the sales, and both by reducing the costs of production. Then let's see, why is profit important? Profit is important because it rewards it is return of the hard work that we get for the business that we have done, and also the risk taken. The investment that has been made, it's a return of the investment that has been made by the shareholders, by the investors. So now we come to the definition of income statement. So the income statement is the document that records the income of a business and all costs that incurred to earn that income over a period of time. So it is the income. It has it has the list of all the incomes and also all the costs. Okay, and previously it was known as profit and loss profit and loss account or profit and loss statement. The modern terminology is income statement. All right, moving on. What is profit? Okay, we have seen before that, before we have seen what is income. Now we will look at what is profit. So, and it is the difference between the revenue and the total cost. Okay, and it may be, if the total cost is more than the revenue, it may be, gross loss as well. So profit is the difference between the gross profit is the difference between the total revenue from the selling products and the cost of making those products. Okay, and the retained profit is the profit that we have is reinvested in the business, is called retained profit. And the the net profit is the total is the difference between the total revenue and the total costs, or the difference between the revenue from the sales and total costs, or the difference between the gross profit and the expense. So when we subtract the expenses, total expenses from the gross profit, we get the net profit. So before we have seen that profit is the total revenue minus total costs, and these are the ways how we calculate in the profit in the income statement as well. And the revenue is the multiplication of the quantities of products sold and the selling price. When we multiply them, we get the total sales. So the cost of sales is actually the cost of purchasing the goods used to make the products sold, and the total cost is actually can be divided into the total cost of sales and also subdivided into expenses. Okay, so the cost of sales, or the total cost, is equal to the cost of sales plus the expenses for the operating expenses to for the cost of production. So this is the format for profit and loss statement. First we have the sales, and then we reduce the cost of the goods sold, or the cost of production, which gives us the gross profit. And this, when we reduce that, when you reduce that from the when we subtract the gross profit, when we subtract the expense from the gross profit, we get the net profit. All right, and then, so what is the definition of these terms that comes in the profit and loss statement? So the gross profit is when the sales revenue is greater than the cost of goods sold, and the sales revenue is the income that we get from the sale of goods and services. As we have seen, it's the multiplication of the the amount of products sold and the selling price. The cost of goods sold is the cost for producing and buying the products that has been actually sold. And finally, we have this profit and loss statement. Okay, so the profit and loss statement, we can see the revenue, and the we can see that the revenue is there. First of all, for the financial year is mentioned, for the month and for the year and so on. And we have the sales revenue minus the expenses. So what are the types of daily expenses? We can see here that we have salaries and wage expense, rent, advertising expense, or the marketing expense, utilities, and the total expense. Finally, we have the net income. So we have a net income or a net loss in a profit and loss statement. So this is also another format. So the year has ended in July 31. Okay, and this is for the Go Faster Sports company or organization. Finally, we have a net profit. Okay, so it is a more detailed format. We have the cost of sales. Okay, and then we get the gross profit from from the revenue minus the cost of sales. We get the gross profit, and then we get the we minus the expense, and finally we get the net profit. So that's it for the presentation for income statement. Thank you so much for listening to this, for viewing this presentation. I'm Irfan Rahman Sakib again. Thank you.